Wow, what is up, guys? So it's Monday, September 12th, and I made $2,500 today on SPX. This is another trade review where I sit down, no bullshit, and just go through my trade setups, why I took the trade, to help you become a better trader. For those of you that are new here, my name is Forrest. I invest in stuff and you should too. I'm actively learning how to day trade. I've been day trading for a while. I say learning because I'm not at the level yet. I wouldn't say I'm a pro yet, and that's just being honest. Totally okay. But yeah, what we're gonna do is, so I trade in Thinkorswim. We're gonna talk about the market today, what's going on in the general space, and then we're gonna go into my trades. If you just wanna see what I traded, go ahead and skip ahead in the video. But yeah, let's go ahead and get started. So let's first look at my trades. Overview of my trades, privacy mode, which is nice for recording because you guys don't need to see how much money I have. Oh wait, actually I'm supposed to talk about the market first. So what's actually happening in the market right now? It is September, right? The market normally teeters off, peels off a bit after the summer hotness. CPI numbers are coming out. We're still looking at inflation. We're thinking about inflation. There's still the war going on over between Russia and Ukraine. That's still a thing that's happening. There's still the tensions with China. So these are some of the bigger macroeconomic events that could affect the market. I think right now, really what people and really what markets care about is money. Money! How easy, or not money, but they always care about money. Hey buddy, relax over here. That's my cat. The ability to lend debt, right? So liquidity, debt liquidity, as we'll call it. That's not a real term. But just think of it how easy it is to get debt, as well as how expensive that debt is, determines a lot of future cash flow valuations and things like that, right? Very simple example. If you look at somebody's financial breakdown, right, there's something called interest expense, right? People are paying interest on debt. When interest rates double, causes that line item to double. Money is more expensive. Now, that doesn't happen to any debt that you currently have. That only happen to new debt, or if you have a variable rate or things like that. But the point is that can slow down the borrowing of money, and people borrow money to invest. They borrow money to hire people, whatever it is. And that's actually what the Fed is trying to do. The Fed is trying to cool off the market on purpose. And so this is something you have to keep in mind. If you want to know what the policy is, and it doesn't really matter what you think about it or how you feel about whether it should happen or not, you just need to know that it's happening when you're trading so that you can look for these moves. So let's actually go ahead and look at SPX, my trades today. I'll pop this open. So you can see that there's a few positions here, right? 4100 puts, 4110 call, 4140 call, and a 4070 put. Titus, come here. I'm trying to record a video, buddy. What do you want? My dang cat. Love him to death. So not that many trades today. And I think if we look at filled orders and, you know, we can actually see these trades. I had, 2 day trades and 1 swing position, which is still open. So you can see I took a straddle going into tomorrow. So I have a 4070 put and a 4140 call. These weren't exactly the same amount outside the money. I wanted to line up the premiums. Nevertheless, I expect tomorrow with CPI numbers coming out to be a volatile open, and the winning side of this to be pretty profitable. So that's the hope. You can see I only took 1 contract, not getting crazy, just kind of wanted to play those numbers. Let's look at what the market did today. So this is SPX today, and we're actually going to go over to Trading View for this. This will be a much better look at the market. TradingView.com and the S&P 500. Actually, we'll just open up. So these are the charts that I actually use to trade, by the way. So here we have a look at the market. Let's expand this a bit and let's figure out what we actually have. So in the top left here, I have SPY. This is SPX. This is what I actually trade. This is the VIX, and this is ES. Why, Forrest, do you have so much of the same index or similar indexes on your screen? So ES is where big money is, right? So I look at ES for volume information. This is going to lead the market. So ES leads the market. You don't trade ES really unless you have 7 figures, right, in your account, but that's big money. The VIX is really, really important. It's really, really important to know where the VIX is, long-term and short-term. If there's low volatility in the day, don't look for a breakout. This is a mistake I make all the time. This is a mistake I probably see when I analyze other people's trades and I talk about it. It's like, why did you expect such a big breakout when there's like no volatility today? We're just in a congestion period. So keep that in mind. So always monitor the VIX. And I have SPX, which I just have open. I'll probably actually get rid of this, but I trade SPX for a reason. It's really efficient. It's cash settled, and basically only part of your position is taxes short-term capital gains, which is super sweet when you day trade, right? Because I'm in and out of positions every day, and those are short short-term capital gains. And then I have SPY, map my support and resistances here on SPY. Whew. So that's halfway. On the bottom, what do we have? We have the X's, right? So I have the X's and then I have Amazon on the left. So I'll probably get rid of that. Why do I have the X's? So these are sector funds, right? We see this one, XLF is finance. We have healthcare right here in the second one on the bottom left, XLV, and then I have XLK, which is tech. When we're day trading and we're looking at the relationship between these charts, almost every time, and these are connected by time. Let's look at this drop right here. So this was at 10:42. Let me make sure I'm in the right time zone. So this is actually like 11:42. We look at 11:42, we can see where my reticle is on all this screen. Everything dropped at once. Don't mind the top right now. Let's look at Amazon. Let's look at, and then the X's here, right? So this X, and this X, right? All three of these started dropping at the same time. That's not always the case, right? Sometimes they're desynced. I try to wait for these things to sync up, and there's a level of technical analysis that we could do when we look at these to try to catch these sync up. The trade that I took, the put that I took, was right around this time frame. And let's actually validate that. Let's see what time I took that position. Let's go to monitor, and it looks like I opened my first put position right around 11:51 actually, right? So 11:51 is when I bought these puts, and it looks like I had another position. Well, we'll just focus on this trade, right? At 11:51 a.m. So let's look at 11:51, which should be around 10. Here, I caught the end of the move. You'll notice I didn't front run this, right? So I know it says 10:51, but there's an hour. My trading view is off by an hour. It's been like this for a while. I don't know why. But the point is, you see, I did not front run this move, right? So the market was selling off. There was this congestion, this consolidation here. We should actually take a closer look at this. So look at this period right here. We see these bars are barcoding. I wanted a really strong signal that we're going to get out of the zone and not bounce right here. If you see this bar right here where we closed on the 3-minute at 409.91, we could have just bounced. We didn't, right? We started selling off, and the reason I took this trade is because I saw an increase in volume. So we saw back-to-back red bars, increase in volume, and ultimately that's why I took that trade. It could have been bigger. I think I left like $5 grand on the table with the move, but more than happy to essentially make my target for the day in one trade, and my target is right around 2,500 bucks a day. I try to make 2,500 bucks a day on average. Some days I do better than that, some days I don't, and I journal it. I also look at my trades. The reason I started doing this is because I like to look at my setups for the day and understand trades that I could have got in that I didn't, and then successful trades. Why were they successful? Was I lucky? Which happens. Sometimes you get lucky, guys, and you need to know when you're lucky. You need to know when you're actually trading and when you just get lucky. It's okay to get lucky. That'll happen. You'll get unlucky too. So you want to minimize luck on both sides. I really want my outcomes to be driven by the decisions that I'm making and not just luck. So that's that. The other tool that I use is Bookmap. So you can see here, I don't know if this is going to load in after hours. It might not. I might have to redo this during the day. I actually pay for the actual Bookmap app, but I just use it in Thinkorswim because it's built in, easier. I don't trade on my laptop. I'm looking at my laptop right now to record this. I actually trade on my trading desktop. I'll show you my trading desktop right now. Let's take a look. That's where I trade. So I usually just have this up on another screen, but yeah, Bookmap loaded, cool. So Bookmap tells me where market liquidity is. And so all this tabs that I was just looking at, in addition to Bookmap, is how I enter my trades. And there's one more thing that I actually use to enter my trades. And so you'll notice that this is labeled main charts. Then I also look specifically at tech. Now, is this the best way to do it? I don't know, but this is what I do. This is my system, what works for me. And again, you know, I try to make 2,500 bucks a day, and I do pretty good at it, guys. Why tech? Well, tech and the sentiment of tech is really, really important to understanding. Again, I'm looking for as many green flags as possible. I can't monitor everything right now. And I also only trade part-time, so I try to just use what I think are the strongest signals. If there's a ton of divergence in tech specifically, right? If all these charts start to diverge, you can see I have some random tickers that I have, you know, random Wall Street bets plays on, which we're not going to talk about. I just have lotto amounts in there, but normally these are just all tech companies, and the big tech companies, you know, that make up like XLK and all the other tech indexes. But monitor the big sectors. You need to monitor the big sectors. You need to look for convergence and divergence in, really think of the EMAs, right? And so if all of these are bouncing off the 8 at the same time, if all of these are about to cross at the same time, all of these are in a consolidation right under a support level at the same time, and it looks like we're about to break out, right? Volumes increasing on every single one of these. I'm going to take a call, right? Because we're testing that level. And if I see a period where buyers start to come in, that's where I'm going to take that call. Same thing if I switch back to my, main charts, looking at SPY and all of that. When I look for these trades or this dip in the market, I'm looking for everything to be in sync as possible. I used to trade, and maybe you're doing this now, just looking at one chart, a few charts, trying to do TI on one chart. You don't want to do that, guys. You want as many signals as possible. Technical analysis is just one indicator, right? I think TA works. I think it's useful. I think people don't use it correctly, right? TA is a tool, and what I advocate for is, you should trade with like 8 tools, right? You should have as many tools, as many indicators, maybe is a better word, as possible, so that the market convinces you to take a trade. If you're really easy to convince, if you only need to see one thing, which is like TA, you're gonna get convinced easily, and you want things to be out of whack, right? Because when they sync up, I've never taken a trade where everything synced up and it was a losing trade. The only time where I lose money right now is when things are divergent and I'm trying to front run. Habit I'm trying to break. So come up with a system where as many indicators as possible. And when you literally, you're like, I have to trade, right? Everything is green. I have to take this trade. And that's when you're going to get to that next level. And that's really the level I'm at right now. So not going to get too much further than this. We're already at 14 minutes. Video's a little longer. But yeah, hopefully that's helpful. Let me know down in the comments what you'd like to know more about my trades. I just trade SPX right now. I do trade. So some of this tech stocks that I watch, I do trade those individually. You can actually see my swing plays updating in real time. But we're gonna stop recording my screen and we're gonna call that a wrap, y'all. I'm the real deal. Actually, we're not gonna call it a wrap. There's one more thing I want to say. Trading is hard, so that's the reason why I'm putting these videos out there to show you guys some modest wins. Also put out my losses. I'm gonna try and do these as much as I can. I've got so much stuff going on, but I appreciate you guys. My channel is slowly growing. I don't take it for granted. 1,000 people might not seem like a lot to some people, but I like to imagine having the opportunity to speak all of you in one room, and that's a lot of people. So don't take it for granted. I appreciate the time that you stopped by my channel amongst all the others. Go ahead and hit that subscribe button. Share this with some friends. Definitely ask me questions down in the comments about trading, life, finances, emotional intelligence, what it means to be a man, whatever's on your mind. I've got thoughts on all of it, and I'll see you in the next one.